So who is Warren Buffett? Well, besides the fact that he loves playing the ukulele and he drinks 5 12-ounce bottles of Coke per day, he's a multi-billion-dollar investor who's one of the most well-known investors of our time. On top of that, he also runs Berkshire Hathaway, which owns 60 different companies such as Geico, Dairy Queen, and Duracell, to name just a few. And in this video, we're going to talk about 8 ways that he suggests that you invest. 8 rules, as it were, that he suggests that you use when it comes to your investing. And later on in this video, we're going to talk about one rule that specifically he suggests that you do no matter what the market is. You need to understand this rule in order to make sure that you are not losing money. So without further ado, let's get right into it. First thing that Warren Buffett suggests is that you buy and hold. When it comes to buying a company, he suggests that you think about it long term, that you think about it 5 to 10 years. Is this a company that you want to own for that long? And he says that if it's not something that you can feel comfortable owning for that long, then maybe you shouldn't invest in the stock at all. Rule number 2, he suggests that you stay in cash if necessary. What this means is perhaps it's not a good time to invest in the market. Perhaps it's a time where people are being greedy and that you need to be more careful with your finances. And this would be ample time to be able to take a step back from the market and say, okay, for now, I'm not going to invest in the market. I'm going to keep my money in cash for a time so that I can have it in the future and have it ready for when a good market buying opportunity comes. Rule number 3 is invest in companies that you understand. This means that if the company is something that you haven't even researched, you don't really understand, but there's a lot of craze behind it. Think GameStop, think AMC. These kinds of companies are the ones that everybody was getting on the bandwagon, as it were, and just investing in them because there was a lot of craze around it and the company had shot up in price higher than anything that we've ever seen in the stock market before to date. And this is not a good idea. This is not a way of investing in the stock market for substantial long-term growth and to be able to protect your finances. Undoubtedly, yourself or a friend of yours has invested in a company like this, in GameStop, and AMC, in Robinhood, whatever it is. These investments people have invested in, and some have made a lot of money, and a lot of them have invested and lost a lot of money because they timed it wrong or they were just going for the craze. So be careful to make sure that you're investing in something for the long term. Rule number 4 connects to rule number 3, and this one is invest in companies of quality, companies that you can see them being around and being relevant for the next 5, 10, 15 years, companies that have a good track record, or companies that just have a great management team around them that are going places, that are doing innovative things. These are the kind of companies that Warren Buffett would suggest that you invest in rather than investing in speculative companies that do not have any sort of track record and do not really seem to have much of a future. Now, if you're liking this video, go ahead and hit that like button, hit the subscribe button. It really does help out the channel. And next up is rule number 5. Know the difference between price and value. This is important because a lot of times in our stock market, especially over the last couple years, the price of stocks has gone up so exponentially that the value behind that stock has been forgotten or has been put on the back burner, as it were, and the actual value of the stock has gone up way past what it actually is valued at. So this is important to understand, to do research into how well the company is doing with its financials, with its sales, with its future forecasted sales. These are the important things that you're going to want to look into to understand if this company is valued appropriately for how much you are buying the stock for. Rule number 6 is choose the right news to follow. What this means is for the majority of the news that you see, you are not actually making investment decisions based off of that news. And that's what Warren Buffett is getting at here, is you're going to get a lot of news in the market that's going to say you should do this, you should sell this, you should buy this, you should do this. And a lot of times that is just talking, and you need to make sure that you are being careful with who you're actually listening to in these situations. Rule number 7 may surprise you, but that is to sell at the right time. Yes, even though Warren Buffett has the most diamond hands you'll ever meet, he is someone who says that you should eventually sell. And when should you actually sell? You should sell when the company that you're invested in's fundamentals have changed. And that means that you were investing in the company here and it was doing really great and you just really appreciated the things that they were doing, but now they're somewhere over here and they no longer meet your investing standards. At that point in time, you need to reassess and consider selling that stock so that you can go ahead and invest in a company that you still believe in. And rule number 8 is act like when you buy this company that you're actually buying the whole business itself. Imagine you went out and you decided, okay, I'm gonna buy a stock of Robinhood. Well, imagine that you're buying the whole business of Robinhood. Is that a business that you would wanna own? Is it a business you wanna own for the next 5 to 10 years? Is it a business that you have looked at all of these other aspects that we talked about before and that you've done your due diligence and you understand that this business is gonna do great, it's gonna go far, you really believe in its mission, you really believe in the fundamentals of the business, and if so, buy the stock. But if not, then you want to consider holding off until you find a business that you are willing to stand behind. Investing in the stock market is not as complicated as it may seem. It's just a matter of investing in good businesses that you understand and that you are willing to stand behind for the long term. Now, when it comes to investing, it's very important to remember one of the most famous lines from Warren Buffett, and that is to be fearful when others are greedy and to be greedy when others are fearful. So now go out there, decide if now's the time to be fearful or if now's the time to be greedy. Thank you so much for watching. I appreciate it. Look forward to seeing you next week. Rule number 6. That's the rule number 7. Let me try it again.